Can I take $6,000, invest them in Coinbase options this week, and buy a $35,000 Model Y on Carvana? Let's see if we can make it happen. My Audi met with an unfortunate accident in the latest snowstorm, so I am in need of a new vehicle. In that spirit, I am going to do what I do best and invest. So I will take about $6,000, purchase Coinbase call options that expire in May, and in a couple of days after Coinbase reports their earnings, based on my analysis, they're going to crush it, and those call options will be worth a lot more. Now, I could be totally wrong here. I hope I'm not. If you watch my previous video, I did this for the last earnings call and I made 1,200%. I took just $600 and I made it into 8,000. This time I'm doing a little more conservative call option. I am putting in more money, but I think it's more likely to happen. My forecast is that Coinbase is going to make probably 60% more revenue than Wall Street expects. And on this surprise, the share price should go up. Now, there's many risk factors between now and then and how Coinbase company may guide Q2. Stock market is a forward-looking animal, and even though I could be 100% correct on how much money they made in Q1, that is a backwards-looking indicator, and the market is more interested in what's going to happen next quarter or the next following few quarters. So if the guidance is weak, my whole investment may go to zero, which I am perfectly fine to do. My previous Coinbase call option made me $8,000, so this is going to be a $6,000 bet. Even if I lose 100% of it, I will still be up $2,000. So it is a bit of a gamble, not for new investors, but let's dive in to see what the market is doing, some other companies, and then we'll touch upon my Coinbase strategy to buy that Model Y.
Don't ask them, what do we know? What I forgot is better than whatever they remember.
Welcome back to Delta Code. I am Delta, an economist with 20 years of investment experience, and today I am going to do a little bit of a market preview and review based on the earnings, especially for Coinbase that reports earnings in a couple of days. I'll share with you what I'm doing in preparation for that earnings report. So first, let us take a look at the market. It is mostly red across the board for the S&P 500. Big tech, Google, Amazon, Nvidia, Microsoft, Apple, Meta, and Tesla are all down. Tesla especially, almost 5%, giving back some of the recent gains after their earnings report. Now, there is a little bit of green in healthcare and some in insurance. Obviously, insurance has been going up, but that is neither here or there. I think a lot of the market's red today is based on expectations of Fed's announcement tomorrow that will not likely be good because of the high inflation numbers. So they will not likely lower interest rates and even possibly signal that they might increase interest rates further to battle inflation. Looking at some of these companies that were reporting today and the rest of the week. Yesterday, SoFi reported. Today, it's PayPal, Amazon, AMD, Starbucks, and Pinterest, companies that we'll pay attention to. Tomorrow, it's Qualcomm, Carvana, Fastly, and Etsy. Mostly Carvana because we did start a long position on Carvana based on the high short interest. We did sell that today before the earnings. We are not confident that earnings are going to be great today, given that the used car prices are coming down. But we are going to do something very interesting today. We are going to buy some options on Coinbase, hope to make enough money to buy one of these Teslas on Carvana. Let's see if we can make that work. Are you guys down for a little experiment in high-risk gambling? Let's do it. All right. So, SoFi. SoFi is down after reporting yesterday. It was about almost $8. It's dropped down to $6.80. After the earnings, it went from 780 straight down to 7, and now it's trading below 7. The numbers were not terrible, but they are in an interesting spot given the interest rates. They have a lot of loans out, and loan delinquencies are going up. So investors might be thinking that they're exposed to larger defaults. A lot of businesses, for example, it was reported yesterday, are not paying their rents, small businesses at the highest level since 2021. This may trickle down to consumers who might not pay their personal loans, their student loans, or other loans that SoFi has given out. And that ding on my phone right there was a notification that another call option order was filled in my trading account. We'll take a look at those in a second. Okay, next is Intel. Intel is going to benefit from this AI hype, and it is an interesting play. They just reported earnings that were terrible. Stock fell down, I think, 10% and a little more following days. But Intel did receive billions of dollars from the government in the CHIPS Act. They are producing a fabrication plant to make 2 and 3 nanometer chips. These are the next generation chips for all the processors and GPUs that will be used for AI. Now, NVIDIA, their new Blackwell chip, is actually in higher demand than they expected. So Taiwan Semiconductor actually can't fulfill their orders based on the pre-orders they made. So there's going to be excess demand for AI chips that NVIDIA won't be able to meet. So this is an opportunity for competitors like Intel and AMD to swoop in and capture some of that market share. Now, AMD has been blasting up for a long time, catching up and surpassing Intel. Intel was sleeping at the wheel, and right now, the PEG ratio for AMD is actually really low. Anytime it's 1 or under, that means that the company is growing so fast that the current high price, the PE ratio, is justified. So the PE ratio right now on AMD is really high. But when you take into account how fast they're growing, it's actually reasonable. So AMD is definitely a competitor to both Intel and NVIDIA. And it's the only manufacturer, or it's the only company that designs both CPUs and GPUs. So they have their foot in both markets. And I think that there will be synergies from this. And I believe this since 2003 when I first started investing in AMD. Now, Lisa Su is a great CEO. She's very technical. She's an engineer. And much of what has done to turn the company around comes from her know-how. All right, next. Amazon, we just discussed AMD. Pinterest, we touched upon it yesterday a little bit. This is a great company that has a lot of interesting data on their consumers, and it has been growing lately from 18 billion to 23. Their numbers could be better, and we're looking for improvement in growth and monthly active users today. If they deliver what the market expects, we can see this shoot up probably to $40. Next up, Amazon. Amazon was a great buy at 1 trillion. Now it's almost 2 trillion. Still, PEG ratio is a little high, not terrible, but I would like to see more growth and better margin improvements before I add to my Amazon position. We'll see what kind of earnings they deliver. They are definitely a leader in robotics use. They are using more and more robots in their warehouses to do more and more of the work. They've always been a leader in AI and predictive modeling and predicting consumer demand, logistics. So as robotics and AI revolution ramps up, we can see their profitability and margins to improve as they use more robots. Second to last is Carvana. Carvana is about $82. We started our position at 40. We sold today because we needed some capital to buy options for Coinbase. Now, I am not making a big judgment whether or not Carvana is going to do great today with their earnings or not. I do think it's a great company that has a really high short interest, which is good for investors if they deliver better than expected earnings, which will force these short sellers to buy back, further fueling to a positive feedback loop. Now, what really interests me about Carvana, prior to me already making 100% from 40 to 80, is I want to use it to buy a Tesla. I am interested in a used Model Y, and these look reasonably priced. So this week, what we are doing is we are betting that Coinbase is going to crush earnings and that the price of Coinbase shares is going to go past 280 within a couple of weeks of them reporting. With that in mind, we've been buying options. Which options did we buy? Well, we already have some long-dated options. We have long-dated options for next year, March. But what we want to buy and what we have been buying lately is the May 17 call options that are above 250. So we have two of 250 at actually a higher price than 640. We have 270 at a higher price than 4. And we have 2 at 280 at a higher price than 3. So we've been buying these. Today we pretty much doubled how many we have. I think some orders just got filled as we started recording. So in total, it's about $8,000 or maybe $5,000 invested. We'll see what orders got filled. And we're hoping to turn that $5,000 into, I don't know, $35,000 and buy a Model Y. Let's see if we can do that. Now, if you watched my other options videos, you know that this is very risky. This video right here of how I made $8,000 with a $600 investment, which is 1,200% in 1 week, betting Coinbase options. I'm not saying that this is going to happen this time. I'm not expecting 1,200 return, 1,200%, but maybe 500-600% on my investment, enough to buy a Tesla. I am perfectly willing to let that go to zero, and it might if by May 17 the price of Coinbase shares isn't heading towards 250 or above. Those options will either lose a lot of value or be worthless. Please take a look at this video. I do a lot of warning and disclaimers when it comes to investing in options. This is not for beginner investors. Please just follow along, trade hypothetically, see what happens. You are going to lose money most of the time trading options. Most options expire worthless, I think 75% of them. So only 25% of the time does anybody really make money on buying options. Now, selling options, you can actually make passive income if you're going to hold on to some shares anyways. They're willing to sell them at a certain price. For example, if I was to sell these options, I could make this premium here, and let's say I bought shares today at 200, and then I sell an option to sell it, a call option at 250. Well, then I just made myself, $6 a share for free, either insurance or just passive income. And if it goes to 250, well, I get to keep the $6 and I made 25%. So seems like a no-brainer to do. The risk you're taking is if you're buying at let's say the 205 and selling at 6, it's basically like you bought at $200, and then if the price goes down, you're only insured by that $5 of cushion. But if it goes up, it's a win-win. So if you have a lot of shares or if you plan to purchase them, it's an interesting strategy to buy shares and sell call options. That's it for today. We will keep an eye on AMD, Amazon, Coinbase, Carvana, Intel, and SoFi. Mostly Coinbase, because we want a new Tesla by end of the week, maybe in a couple of weeks, depending how price of Coinbase moves after the earnings. If you don't know why I'm so bullish on Coinbase, you can take a look at this video here, Coinbase forecast. Also talk about it here in an interview, as well as on my Substack. You can take a look at the Coinbase forecast and expectations that I have there, why I'm so bullish, and how I used my previous forecast to bet on options profitably. Thank you for tuning in. Don't forget to like and subscribe. And as always, may the force of compound interest be with you. Peace.